Volatility is up over the last couple weeks. We've been seeing the broad market trade up or down greater than 1% each day. I recently posted a video on high inflation. There's also a new variant on the loose, and we're still not sure exactly when to expect interest rates to be increased. The first thing that I want to point out is that the broad market is doing fine. Large cap and mega cap companies are still at or near all-time highs. So if you own a large cap fund or something like the S&P 500 index, you're holding up really well. However, if you own small cap companies like I do, you are feeling the pain. These companies seem to just go lower and lower every single day. It's been a total bloodbath over the last couple months. However, you've probably also heard me talk about the disparity in previous videos between large cap and small cap PE ratios, forward PE ratios specifically. And this gap seems to be getting wider and wider. And sooner or later, this is going to change. I can't tell you exactly when, I have no idea, but eventually there's going to be a rotation of money. Money is going to flow out of these large and mega cap companies where people have booked profits and valuations are high, and it's going to be channeled into these smaller cap companies. And when this does happen, stocks are going to move, and they may move very quickly. So when the turnaround comes, you might see your portfolio start flying if you currently hold small cap. I recently put out a video on inflation explaining why what we're seeing right now makes sense and why it may last a bit longer than some people think. The Treasury Secretary Janet Yellen recently came out saying that the elevated levels of inflation that we're seeing right now may stay around into the back half of 2022. And she kind of makes it sound like it's a good thing. It's only gonna last another year. But the messaging on all of this inflation business has really changed. At first it was transitory. I heard that word a million times. But the goalposts have kind of moved. This inflation has been around a while, and now it's going to be around for another year, as predicted. Who's to say the goalposts will not be moved once again and the can kicked a little bit further down the road? Does any of this sound familiar? It kind of sounds like the rest of our life. Right when we think things are about to go back to normal and we see the light at the end of the tunnel, something happens and we just don't. And if we were to have another round of stimulus payments and the government passes another stimulus package, or we were to, heaven forbid, go into another lockdown, it might be the straw that breaks the economic back of America. We simply can't afford to have another one of these major economic setbacks. Don't get me wrong, the government spending has felt nice. It has been a bit of a backstop to some of the short-term negative effects that we could have felt, and it's kept stock prices high. However, we can't risk damaging the economy from a long-term standpoint by continuing to spend like we have been. At some point, we do need to return to normal and press on. As far as the market crash question, that's a bit of a tough one. The Fed has already thrown trillions and trillions of dollars at the problem, so they've shown a willingness to step in. So it seems like they wouldn't just let things crash and burn after they've already come this far. That being said, market crashes are unpredictable. There could be a catalyst that could show up tomorrow that sends stocks crashing. I really don't know. The best thing that we can do is to own high-quality businesses that will perform well over the long term and consider holding some cash on the sidelines. With that said, guys, if you've made it this far in the video, thank you so much for watching. Don't forget to like the video, comment down below, and consider subscribing. Until that next one, peace.